Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at another requested stock, Movado, ticker MOV, a Swiss watch company. And I am very into watches. I own at least a dozen, and I love to watch content on watches, new watches that come out. Movado is not a brand that I'm a fan of, so we're going to start with the product that this company actually sells. And I, like most watch investors, watch lovers, like a good dial. And Movado is known for this nothingness. It's just a face with some hands. And the prices on these things are a little outrageous too for what it is. I get that it's a Swiss-made watch, but you know, at least you have a open back on the Red Label series, and the front, there's nothing nice about it. This thing costs $1,900, and you can go to some of the others, like a chronometer. Let's take a look at their Altas, where it actually has somewhat of a face. But look at these prices, $4,000. I could buy an Omega Speedmaster for not too much more than that. I would never touch Movado. Somehow, they still sell watches, though. And that's what we're going to look at today, because they sell quite a few watches. If we look at the stock, we see that they've kind of been pretty stagnant. I mean, there's not a whole lot of movement up above this like $20 mark. They had gone up above it, came back down, gone up, went below, kind of coming back down to it, elevated a little bit. It's not too surprising when we look at the numbers, though. So this stock is a little different from what we've been looking at recently. We've been looking at stocks where they killed it in 2020 and they had really good trends, and expectations were going to cut down pretty far in 2023 and beyond. Well, for this stock, the trend to begin with was not good. 2.37% year-over-year growth. That barely outpaces the target for inflation. So we're just going to say that this growth is stagnant because inflation's been so elevated over this period that they've been losing money. It's gone from 701 essentially to 751 in a 4-year period. This next year, it's expected to go to 738 and then to 791. So it's stuck in these 700s. It dropped down to 506 in 2020. 2020 was an awful year for them, but they've been pretty stagnant outside of that. Expenses as a portion of revenue, something important that we look at, that's been pretty stagnant too. 84. They at least cut it down from the mid to upper 90s down to 84 over these last 2 years. It'd be nice if that could go lower. The net, they end up with 12% net. So 2021, 2022, they seem to have really gotten whatever they were doing down, and these years look pretty similar. Not a whole lot of revenue growth, not a whole lot of anything. They gained 20 cents on earnings per share, but they bought back 1% of shares. So that's a portion of that right there. Earnings yield is okay. Earnings per share, I mean, if you look all the way back to 2019, that's decent growth, but really 2020 was negative, so I wouldn't even consider taking a look at this stock as a buying potential until 2024, and they weren't able to do much from 2021 to 2022. That's going to be cut down to 2.8 this year, and then hopefully to 3.83 the following year, according to analysts. Share count is decreasing. That is something that's good. Free cash flow yield, not really growing. It was 2.7. It's up to 6.3, but it shot up in 2020, 2021, and it's back down in 2022. Tangible book value, they are at least positive and growing. They have been shrinking in assets, but shrinking in their liabilities even faster. Debt to equity, they have a 0.55, so they're okay on debt, definitely within our bounds. ROE, they have yet to hit 20, which is the minimum that we look for on a return on equity. So they do not meet on that criteria. Dividend, they've been okay at growing it. They actually paused in 2020, but they've moved from paying 80 cents to $1.40 this last year. This year, they've paid out $1 special dividend, and they've been on the same track that they were this last year. So we're expecting $2.40 unless they raise it, and hopefully they'd raise it by next year. We can't expect a special dividend, so we'd be looking at something 140 to 150. For the fair values, the value is mostly driven by the balance sheet, which is shrinking, and the dividend, which they have at least been growing. But if their cash flow can't stay in shape, that could become at risk. That's followed by the cash flows and then the earnings. So they're not a huge earnings stock. They would be considered at value levels right now, below the margin of safety. But with what we see above, they do not hit the growth potential and the ROE. The assets are shrinking. So definitely hold at best. So we can look at some of these trends. There does seem to be a decent trend, like overall in the revenues with expectations, but the cost of goods is a little all over the place. Profit, net profit, and EBIT, we don't see a whole lot of a trend here at all. It goes down, up, flat, with different sized bars for each of these, even though that the revenue numbers are very similar. The balance sheet, we see that asset shrinking into 2020, and they've been growing it since. We'll see if they're able to continue that. Tangible assets have been consistently growing at least. This graph actually looks very good, where we see that the tangible book value is growing and the liabilities are shrinking. So that is something good to say about the balance sheet. And I mean, by the time they're considerable, remember, we don't want something within the last 3 years to have any sort of negative earnings, net profit. So they'd be up for consideration next year, at which point we'd be able to see more of a trend in those assets and make a better decision. Cash flows, these are definitely all over the place. Like we see it climbing into 2021, drop way down in 2020, and then I'm just using the revenue and their average cash flow yield to determine what 2023 and 24 numbers would look like. Dividends, we see that pause, and we see that they have that special dividend in 2023. Otherwise, they're okay on growth. Nothing too crazy. So for this stock, I'm not going to give it a sell. It is growing. There's no massive red flags, but the growth is not anything that would warrant holding the stock. I mean, it was growing at 2.4% year over year. I have savings accounts that earn more than that. And they're using the dividend they're growing that because they've had decent cash flows, but that's going to eat away at those cash flows. Right now, watches have become super popular, and that might help to propel them a little bit. What I'm seeing, it's not a stock that I want to hold. And like I said earlier, if you're a fan of Movado and it's what you like, it's what you like. But the majority of watch fans that I talk to like a good dial and like a good complication. These watches literally have no dial, no face to them, and are not incredibly complicated at all here. In fact, I don't even see any. There's a date window on one of them, the Movado Bold. But how much does this cost? $1,400? Nah. I would go to Tissot before I go to Movado if I wanted an entry-level Swiss piece. And in fact, that's what I own. One of the watches that I wear the most is my Tissot PRX, which I absolutely love and is a very popular watch right now. I've been wanting to look into watch companies and their stocks, so I'm glad that this was requested, and I want to look at a few other options to see what's out there that I could own a piece of a space that I love. I have sold some watches. I customize G-Shocks, so if anyone would like a custom G-Shock, let me know. I can take the Casio and put it on a bracelet or a band, customize the dial, the hands, the hour markers. There is likely some upside to the stock. I definitely see it going up into the 30s again, based on the fundamentals, the technicals. It's definitely broken out of the downtrend that it was experiencing, and it was up to 35 earlier this year. So I definitely think that it's headed back up to the low 30s, but it's not a stock that meets quality criteria. So thank you guys for watching. Please like if you enjoyed the video. Comment what stocks you'd like me to look at, or if you want me to do a G-Shock for you, Casio. And subscribe if you want to see more analysis videos. Thank you for watching, and I'll catch you next time.